Should be that one. All right. So this is the most data I have, and you basically, it's not correct because if you look at the render price, it actually launched on the 15th of June 2020, and according to CoinGecko, the price was 5 cents, just a slither above 5 cents. And this is your wave 1, this is your wave 3, that was your wave 5. The rest is down. Okay, I see that. So we had a 5 wave. Let me put it on log, it's easier to see. So you had your kind of your wave 1 up to there. This is the wave 3. And then you had the wave 5 up to there. And this is your 1. Right, you can see that. What's the all-time low? According to this, it was 3 years ago on June the 16th. Which is, it was basically one day after the launch price. And it was, I'm going to mark it out here. June the 16th, this is 2020. This is the all-time low. And it was June the 16th, 2020. Don't think it matters, but I'll put it anyway. June the 16th. And then according to CoinGecko, the all-time high was $8.78 on November 21. November 21. It was a Sunday, November 21. That was November 21 was the end of the bull market. Oh my god. Yeah, that sucked. I remember that day. Everyone was in like crazy profit and no one sold. Yeah. Never again. Just see if this is correct. Yeah, this is slightly a slither above it, but it doesn't matter. It's fine. This candle is fine. So I'm okay with these candles, actually. So basically right now, from the all-time low to the all-time high, there was a 244x from the all-time low, which was on June the 16th, to the all-time high, which was on November the 21st of 21. So within the space of 1.5 years, the price went from the all-time low to the all-time high, and the increase in value was 244x. That's a lot of money. Okay, I'm assuming this is the assumption because I can't see all the data, but from whenever the all-time low was, I am making a massive assumption that we had a 5 wave up. So I'm assuming it was something like this. I'm just like, whatever. I think it's something like that. Who knows exactly how it played out. You have a big wave 5 at the end. So the 1 probably went to about there. The 2 is whatever. It doesn't really matter as long as the 1 doesn't cross the 2. So actually, this whole move down was a wave 2, which was an ABC move. A, B, C. And now we're in the wave 3. And this is the first wave of this. So this is wave 1. So that's the wave 1. A, B, C is a flat. This is the 3. This is still wave 1. Actually, I think this. That goes there. 1, 2, 3, 4, 5. Yeah. So I'm not expecting, if this is correct, we've just completed. If this is wave 1, and the peak of the 1 was this level here, and we've just completed the 3 of the wave 1. 1, 2, 3, 4, 5. Yeah. Could it be? 1, 2, 3, 4, 5. Yeah, could be. So then I'm not expecting the price, if this is the 4, to go underneath this 1. Basically, that's your entry. And you can catch the 5 of the wave 1 and take us to all-time high. There is a trade to be had. It's the wave 5. Just by looking at the Elliott waves. And then this whole arm would be the wave 1. Looking for a pullback to a wave 3 then, a bigger wave 3. Potentially. Right. I mean, you want to get it, you want to catch it back at this value area high, but the reality is you don't want to lose this previous high either. Don't really want to lose this previous high. This is important. That should form an SR flip. This is very rough channel because it's not crazy respected, and it is and it isn't. But the midpoint isn't crazy respected, it is and it isn't, you know. But the bottom is. That's why I like it. See here, this bottom is respected. This isn't really, but it is, and it is and it isn't, but it is. And then this part is almost of it, and it isn't. So it's very rough. But what I can see from this channel that I've drawn is that the bottom is respected. See that? The bottom has been respected once, twice, 3 times. So already have a nice potential entry here on Valentine's Day. here. Let me do a fib pull from the top to this low. Oh, look at that. That's the inverse golden pocket. Is just underneath it. So you would expect the price to come back to form support on that naturally resistant area which we've crossed. We've come into it, we've once, twice, 3 times, we've crossed it. You'd expect the price to come back into it to continue, especially if you have a little bit of confluence, like possibly the back test of this value area high. But I don't really want to lose this SR flip significantly. I don't really want to close. I mean, maybe the SR flip is too high. You know, I can't. Maybe this is enough. This candle here is enough. Maybe we just don't want it to close, but we could get a wick down to this candle with it not close. I don't want it to close underneath these levels. Yeah, but I don't know. I think it could potentially wick down to, it could wick down as long as you think we close back above the SR flip. You know, get a nice bearish push down, and it's just brought right back up. And actually your entry would be this reverse CC66 rather, and it would be the I mean, you could potentially actually, you have a really nice SFP level here. You could take that SFP trade off that wick long, and you have your invalidation. It'd be really fast, huh? You'd expect it to move really fast, long, and then you have your trade. That would be a swing trade, and you're trading the wave 5 of this wave 1 move. You look at the Elliott waves back. The 3 was shorter than the 1, so I'm not expecting this 5 to be longer than the 3. See that? So actually this trade I would only take this trade to the all-time high. That would be the limit of this trade. That would be it'd be a very easy trade, because you're trading the SR flip on this wave, the top of this 1, which will be the bottom of this wave 4. If this Elliott wave count is correct, then there's the 4 can't come underneath the 1, and you're trading the wave 5 to go up to the all-time high, and then that last leg will be shorter than the wave 3, and it has to be shorter than the wave 3 because the wave 3 was shorter than the wave 1, and that whole arm can be your wave 1 of the wave 3, because we've already had a wave 3 and 1 in the first bull market. This whole move will be a wave 1. Then you'll be looking for an ABC correction, probably to coincide with Bitcoin running, and then you'd probably be looking for a massive gigantic wave 3 into next year. I think this works. So there's an easy trade to be had here, I think, and you could just trade that, and from this back test of this SR flip, you're looking at I mean, it's not crazy. I mean, it's only a 2x. It's a 2x, but you have a very easy entry because you're just expecting this to come back an SR flip this one. So it's a very easy entry, and you could potentially scale into that. You close your positions at the top here. You're looking for an ABC correction, and then you'd be looking for a higher time frame, probably losing this channel. You have to see how this correction plays out. Of course, if this could overextend a little bit, but it can't be longer than the wave 3, and then you'd have to see how it corrects. Do you form like a flat at the top here, some kind of flat correction, come back into this channel in September to explode off for the beginning of your wave 3? This could definitely play out, something like that. And so if this is your wave 1, you're looking for a wave 3 to continue, and that would be whatever. That would be like really whatever, bullish, impulsive. Don't know how it would play out. I don't know how the next wave, basically, like that. Then a wave 4, and then a wave 5, and then we're done. I don't know how it would play out exactly. Something like that. I don't know. I do like this channel though, so I wouldn't mind a flat correction above the all-time high. I think that would be the most bullish scenario, but the trade would be to the all-time high. And then if we do get like an ABC in the all-time high, then again you'd have a really easy entry on the bottom of this trend line. Again, just keep on buying the bottom of this trend line until it gives way. You know, that would be the trade. Keep on doing that until it gives way. And I think the next trade will be this trend line, and hopefully that will be with this back test of this SR flip. So yeah, that would be nice. If you get a more deeper correction, yeah, sure, you could lose the trend line and come back down. It's possible. It all depends on Bitcoin. It is possible. You have to see how that plays out in the correction. That would be my preferred bullish, and maybe actually is it lagging? No. Is anyone chatting? I don't know, my chat doesn't show. No, no one's chatting. You have decreasing volume on this way up. Increasing prices. So annoying. Right. Look, oversold CCI. Let me look at the higher time frame. Can't really tell. Overbought on the monthly, looking for a correction. Let me get rid of this and just have a look at the candles now. That's the 12, that's the yearly candle, look. So we are looking for a correction. It's a bullish reversal, but we haven't closed higher. So we are looking for a correction now. Probably down here, look, it's this 2.93. 2.93. 2.93. That would work, see? On the candles. And that's we've already lost this is a bearish candle here. We've come underneath this weekly level. Yeah, this is going down, huh? This is reversal. We might bit of profit taking now. We're still above this level here, but it's not looking strong. And in the context of what I was saying, I mean, maybe we just get like an ABC correction down here. We don't necessarily have to go down. Could do this, can come like that. There is a long opportunity here in the short term, but I would just wait for that. Wait for it to hit that lower trend line, coming in to hit this back test of this SR flip, back test this inverse golden pocket on the higher time frame. I think that would be the best, actually. And so let me just set an alert. Long wave setup. So I set an alert. Let me put this into trade. Let me mark this fixed range as well, so I have a point of reference in case it moves. Value area high. To my normal trade. Get rid of this. I think targets. It's pretty easy. I wouldn't like stress too much about targets. If you just do a trend-based fib, there's two ways of doing it. No, I wouldn't even do a trend-based fib. I'll just do a fib extension from this high to low on the log. Oh, it's black. Let me change that. Oh God, I can't. Why is it black? It shouldn't be black. Oh no, it's not black. It's extended. Okay, good. Yeah. So that would be your targets. The 618 is the peak. So if you look at this channel that I've drawn, and you have these really nice targets, and then I think the bull market will probably peak out in September 25. If we do follow this channel and we peak out at September 25, we have to see how it reacts, but I think easily probably yeah, you just have to see how the price reacts of these fib extensions. Excuse me. Yeah, that one's definitely black. This is a trend-based fib extension based on this first wave 1, which I mapped out. This 0 to 1 to... No, I haven't done it correctly. That's correct. It looks quite good actually, because this trend-based fib extension, you take it from the 0, which is where the wave 1 begins, to the peak of the 1, to the